doing today. I am streaming live here. It is May 19th, 2026. We have about 25 minutes to go unto the closing bell. Now, there's a couple things on my mind I wanted to talk about. Last time when I was streaming, I discussed how I, 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 I just pressed the go live button and look at the screens and just go, and I just start talking, and I don't really take any notes or write down any notes before. Sometimes I have, but for the most part, I just go, and I push the play button, and I just go, and I look at the screens and just start talking. Um, and in the past live streams, I kind of would have had the idea where I wanted to go through a lot of charts, and the past couple of live streams, after so much time that goes by, and I'm talking about various topics and various ideas that I have, and explaining them the best that I can. Just time just goes by quicker than I thought. So even today, I want to go through a bunch of charts for the next couple minutes. Um, but yet I still have some topics that I want to talk about. And we have the S&P 500 futures chart here. And so before I go to what I intend to do, which is go through a bunch of stock charts on my YouTube live watch list that I created, which is about 190 individual stocks, I still have a topic that I want to discuss. And as we see here, we have the S&P 500 stock chart here, and hold on, I'm looking at something. It's interesting. When I go live, I cover up these oscillators. I wish my software allowed my face to be like over here in the corner or up here or something. Let me see if I can change the layout to make it better now. Anyways, I'm live, so you guys could, when I put out the recording, you guys can see. Yeah, this is good for now. Okay, for our live feed, it's good. Okay, so this is an interesting chart here. This is a weekly chart on the S&P 500, and what I wanted to point out here is that if we draw a line, and we can draw multiple lines here. But if you draw a line, a vertical line of the of the various peaks of the past from the S&P 500. And I've drawn a couple different vertical lines here with various peaks in the S&P 500. We have breached these various peaks in the S&P 500. And what that shows is when you get above these key levels, when the market trades above these key levels of these trend lines of previous peaks, tops in the market before we went into sell-offs. As you can see here, we went into that bear market of 2022. We went into the Volmageddon of 2018 and had a very sideways flat year throughout 2018 and 2019. We had the Liberation Day sell-off here from these peaks. When you go above these peaks, you get into a extended run power trend to the upside. And historically, when you get above these vertical trends from peaks in an uptrend, once you trade above these levels, that is indicative of some type of climactic or blow off top in the market. To one extent, it shows how extended we are in the market, and to another extent, it shows that we are way overdue for a sell-off, and that a sell-off, an extended sell-off in the market, is actually very constructive. So this is a real great visual representation here, zooming in here and looking at this, where we can see that the market, the S&Ps, are above these previous uptrends that show that this market is super way too extended to the upside. It needs to have a sell-off. And as you can see here, we zoom in here to these extended levels of market, and we zoom in here and we zoom in here and take a look at these oscillators. You can see how, and this is a weekly chart, everyone. This is a weekly chart. That's what WK stands for. That is a weekly chart, and we see how we are above these trend lines from previous peaks, and we are trading right at the upper Bollinger Band for the S&P 500 weekly chart. So that is more confirmation that we are extended to the upside. And also you can see how we are peaking out on the fast line here of the 310 oscillator, and the rate of change oscillator is also peaking and is trending down to confirm the action that we are seeing in these oscillators. So to me, all this confirms that this is just more confirmation that we are extremely extended to the upside and way overdue for a sell-off. So my long-term bullishness will always remain, but my shorter-term outlook for this market and even now medium term outlook for this market um, is very bearish at this point. Uh, we are way overdue for a sell-off, and it would make a lot of sense for this S&P to come down, and a reasonable target at this point, just looking at this chart, would be where the 20-week moving average is on the S&P 500. So that would be right around 7,000. And the reason why I say 7,000 and not 69.56 is because over time the bars go down as we sell off, and time goes by, and by the time we get to 7,000, when the market sells off to 7,000, the 20-day moving or 20-week moving average will trend up as time goes by, and it will probably meet right around 7,000. What's interesting is 7,000 is a psychological key level for support, and that makes a lot of sense going forward. So at this point, with momentum fading and the market trading above those trend lines, up at the upper Bollinger Band for the weekly chart, this is all adding up to be more and more confirmation that the market is way extended and way overdue for a sell-off. And so you have to be very, very, very careful here, looking to buy anything at these extended levels. I think the best way to bet on the market right now, specifically for short-term bets, anything for next couple weeks or next couple days or whatever in this extended market that we're in, is by buying calls. Because, if you think about it, if you buy shares in a specific company for the long term, and the market, you buy it when the market's extended, the stock sells off, you have to wait it out. You have to wait time out for that stock to go back to all-time highs. And with the market extended the way it is, if you buy an at-the-money or slightly out-of-the-money call, you have limited downside. You can always cut your loss at a specific point, say, 30%, 50%, 75%, whatever it may be. And you have your upside. If the market keeps going up, the value of the call goes up, and you have limited downside. You can only lose what you put into the call. And so I think with the way the market is extended like this, buying at the money calls or slightly out of the money calls, like 45 to 40 delta, makes sense if you want to take any shots to the long side. And when it comes to buying shares of stock that you want to hold for the long term, with the market extended the way it is, I think you need to be very careful. And I think it just now isn't the time. Be like Warren Buffett. He's got tons of cash on his balance sheet, just waiting for a sell-off. So you guys can just have cash on the sidelines waiting for a stock sell-off. So with all that said, the best strategy for short-term trading right now, I think, is buying calls. And you have to be very patient and wait for this market sell-off to play out if you want to buy stocks for the longer term. So I am going to now zoom out and take a look at delete these trend lines. I just wanted to talk about them to everyone. And I'm going to now take a look at my watch list of stocks that I have and start going through individual names for the remainder of the trading session. So let's take a look at Palantir. That is a stock that jumps out to me today. It is trading higher, and it is bouncing off the lower Bollinger Band, and on the daily chart. And as you can see, the rate of change is now trending up close to the zero line, and the fast line is picking up. Hold on one sec, I'm texting someone. So I like Palantir here. Money is moving into software stocks as the semiconductors sell off. The software stocks are catching a bid, and I like how the Palantir is below, just slightly below the 20-day moving average. I like where the stock trades down to the lower Bollinger Band and bounces off of it towards the 20-day moving average. You can see here how the fast line is turned towards the zero line, and the rate of change is turned towards the zero line. And I like Palantir here for a buy, slightly below the 140 level right here, probably around 138 a share. That's a good entry point for a target to the upside to be right at the upper Bollinger Band near these previous swing highs. We have a swing high here at 149, close to 150, and this previous swing high right here at 152. Both of these swing highs are near where that upper Bollinger Band is, so that is a good target right around $150 to $151 a share to the upside. And you can use this swing low here where the lower Bollinger Band is here, right at around $128 a share as your stop. If we trade below 128.50, you could use that as your stop and look for a move up to past $151 a share for a price target. Now, that all being said, the stock is sold off so much. You have another key level here, resistance around 161. So I think that at this level, right around 160 to 161, that can be a level that gets more interest from I think institutional investors, not necessarily retail investors, but institutional investors, because institutional investors have uh, they're looking for value, and software stocks have sold off because of the SaaS apocalypse. Uh, and Palantir has just basically done nothing since basically July of last year. Palantir is now considered a much more undervalued stock. Now, late last year, Palantir was trading it with a multiple that was over 200 times earnings, and it was overvalued. And you had what's his name, Michael Burry, saying that you have to short it, and all this negative press. Even Alex Karp, the CEO of Palantir, was on his conference calls, man. He was getting really pissed off. He was like, "Why are these people shorting my stock? They're gonna go to hell." The guy looks like he just got electrocuted or something. So, when you picture him in your head when he's on the earnings call talking about his stock, it's pretty funny. He's like, "These people, they don't know what they're doing. They're shorting my stock, and they need to stop because they're gonna lose money. Why are they shorting my stock? I have the best AI company in the world." Anyways, it's pretty funny. If you want to laugh, listen to the earnings calls like from late 2025 on Palantir. But anyways, at this price at 135, even up to 160, where you have this resistance, it's still undervalued. And the way the money is coming out of semiconductor stocks, software stocks are now a bid. They're now more attractive, and they're now considered a value play here. So I think Palantir, you can buy at the money calls, and you have upside of easily 15, 20, at least 20 points to the upside, and only 8 or 9 points to the downside if you use that stop right around $128.50. And I like the way the oscillators are turning up, and I can easily see the slow line turn up and go positive as the stock trades above that 20-day. So I think this is a good name. We've got 2 minutes left into the opening bell. Again, I am having a difficult time going through lots and lots of stocks. But we took a look at Palantir, and that's fantastic. We took a look at the S&Ps, and that's fantastic. We got to look at how the S&Ps are overextended, and other sectors. As the S&Ps are extended, they can sell off. The whole market as a whole can sell off. It probably already is being led by semiconductors. But sectors that have already sold off, like software stocks, I think can be bought here. Okay? And I think that money led by institutional investors, hedge funds, pension funds, mutual funds, registered investment advisors, wealth managers, and so on, will look to buy stocks like Palantir. And they will use the money they get from taking profits and stuff like Micron and SanDisk to buy stocks like Palantir in the next couple weeks. And with all that said, we are very close to the closing bell for the day. I am down today. I was down a lot more, but today I'm still down, but not as much as I was. I have some calls in Palantir, so I did buy some 134 calls in Palantir that expire May 22nd. That is the closing bell. It is 4 o'clock and the day is over. And I bought some calls in Netflix but bailed. I lost about 30% of those calls pretty quickly. I took a shot. The stock was moving this morning. It totally reversed. I really looked like an idiot with that trade. And I have a way deep in the money far out call in Eli Lilly. That's a peptide trade. So that is it for today, everyone. I will try to do this again and cover more stocks in particular later this week. Anyways, I start thinking about a topic and I just, a topic comes to mind and I just yap. Time goes by. Anyways, everyone take care.